everyone, Philip from BlackBull Markets here. In this video I'll be taking you through some chart patterns again, and again how to trade them. This is just a quick short video, nothing too long. I see a lot of people get a little bit confused. I'm not sure when to actually enter the trade. I'll show you a bit of a more conservative way to kind of confirm more that it confirms that the market is sort of committed to that pattern more or less. So I'll quickly show you. So you can see here in the start we've got our three basic patterns that I trade, or that people trade with technical analysis. You can see there's a triangle, double top, or if this was the other way around, obviously a double bottom. And then this is then our sideways consolidation. Now look, a sideways consolidation can either be going like this one and this sideways, or it could actually it could go either down or up. But either way, if the price moves in between this sort of parallel channel, then that we can call that a consolidation. So I'll really take you through some of the charts where I found some examples of this. So again, not too much, and I just kind of want to show you guys the way that I tend to confirm these patterns is if a candle closes above that consolidation. So I tend to trade breakouts. So I'll show you what I mean by candle closing above the consolidation. Again, kind of gives you that confirmation of the pattern actually, of the market actually breaking out of that pattern. And what I can also show you is why I don't trade it. Why I don't trade when the pattern just breaks up but doesn't close above the breakout. And I'll show you some examples of that as well in these patterns. So I'll quickly take you through some of the patterns over here that I've picked up. So the first one we're looking at is the Aussie New Zealand dollar. So you can see over here, it was a flat top triangle. So you can see here so the trades that you could have taken over here was this one over here. You can see it was a false breakout, but don't worry about this, because remember, the majority of these trades, a lot of the time, if you get your risk management right, you can see you take small losses for the end of a big win. So that's what you need to learn, as well as you need to learn how to hang on to your winning trades. A lot of people are impatient with their winning trades and have got a lot of patience with losing trades. That's a big problem as well. That's where you need to get your psychology right as well, guys. So trading is actually very easy. It is just the hardest part about trading is your psychology. You need to learn how to control yourself and not get too confident or too arrogant or too scared. You need to figure out your strategy and then trade it like a robot. I tell a lot of my clients this, and they have confirmed that it is actually very true. You need to get your psychology right, guys. It's very important. Like I'll say it again, it's very important to get your psychology right for trading. So I'll quickly show you here again. So here you can see we've had a breakout to the top side of this flat top triangle. You can kind of see, so this is where you would have taken a loss here. Obviously, if you put your stop losses in quite tight, you would have taken a loss either way. That's kind of where it goes. A lot of people won't enter that again because now they're scared because they've lost money. But you can see the candle has closed here. So you can see a previous trade, actually I'll take you again. A previous trade you lost over here with that red candle close. And then again another loss with that green closing candle over there. So you can see two losses in a row. People tend not to take the third one, and that third one, like you can see here with this bearish candle close over here, you can see that it has actually made a very nice move to the downside. And then again, if you put your take profits in support levels, what I usually do, you can see we've actually made a nice long trade right over there of 60 pips. And then the losses we take were very small, guys. So that is why you need to get your psychology right. Again, guys, I cannot tell you how important it is to get your psychology right. So you can see two trades in a row we've lost, and again the third trade you took would have been a big winner. Next one we're looking at is a CAD Swiss franc. So you can see here this was actually a double bottom. You can see this is, I'm still not too sure about this one. We'll see, this does look like it would have been a good trade to take. I would not recommend taking it now, because as everyone does know, never jump on a moving train. So you can see this has well taken off. I'm sure it is probably about 100 pips by now. It did actually make a 100 pip move. You can see a 100 pip move there. So I'll show you how I would have entered this personally. You can see it's made a double bottom over here. You can see the long wick at the bottom. So this is where I would have put my stop loss to manage my risk. You can see I would have entered there on the green candle close, on the bullish candle close over there. Put my stop loss down here, and then the move to the upside. Unfortunately, I did miss this trade, but that's tough luck. That's all right. There will always be another trade. So next one we're looking at is the GBPUSD. Here we go. So you can see that was just a pretty much perfect double top. You can see there it has then bounced with a candle close confirmation. So guys, this is another one here quickly. This is why I don't trade it if it breaks double top, because you can see it does break it but didn't actually close. So some people would have entered that saying that's a break to the top side, sorry, and you could have seen it, the candle closed below the double top and actually continue moving down in a very, very large down move. Look at that. That is just, so that's what I see. That's why I say, guys, that's why I tend to only enter trade when I get the confirmation of a closing candle for the pattern. So you can see after that candle close, you put your, I would put my stop loss just above that, give a little room for the spread as well. So you got 100, yes, 100 pip stop loss, but then you'll take profit. I mean, you've already, you're on almost 1,000 pips, 1,000 pip move downwards. So you can see that is a big move. So risking 100 pips for 1,000 pips, guys, that is, yeah, it's pretty obvious. You know, you should have taken that trade. That is a good risk to reward ratio. The next one we're looking at is Bitcoin. So also again, guys, chart patterns work on anything. It has worked on anything: stocks, CDFs, futures, bonds, CFDs, and then also on Forex, because everything runs off of human psychology. But again, back to the point, you can see here, it did make a double top. It did actually close above the double top, so again, you would have taken a loss, but then again, another close to the bottom. You could see there is a re-entry, and you could have taken that as a short trade. So again, psychology once more. That close, take a loss, and then again, actually it didn't close above the double top, you can see, so there was a high. So this could have been there was no losses in this, taking this, if you took this trade properly. So you can see another move to the downside. Again, it turned into a triangle, and you can see a break there as well. Very, very nice right there. You can see a close of the candle above that trend line, and then a massive move to the downside in Bitcoin. So another one is Euro-Japanese yen. So you can see here, this one was quite a while back, but then again, there's a triangle. You can see it did close over here below the trend line. So again, a move to the downside. You would have taken a loss, but it's all right. The next move we take is a close to the upside, and you can see it has actually continued this trend. I'll show you here on a high time frame as well, so you can see. So you can see there was a trade back here, and look at this massive move to the upside. That is just, so you see a small loss for such a big move, guys, any day, all day, any day for me. That is this again, risk to reward ratio. You need to sort that out when you trade as well. And then another one, the last one we'll be looking at is Brent. So Brent is the hot topic for this week. I've seen on all the news channels. It was a very hot topic. We've been talking a lot in our previous videos as well, so have a look at them. But we'll get back to this again now. So you can see this is actually a sideways consolidation. You can see it's moving between the range over here. It did break here, so it gave us a little bit of a false breakout. You would have entered, taken a loss, and then you would just wait for another break. So if you manage your risk, put your stop loss nice and tight, you have taken a small loss, and then again for a big win over here. You can see by the bullish candle close over there, and then you would have got another move to the upside. So it's just a short little video, guys. Not too short, actually, almost 10 minutes long. But it's just, this is just what I personally, how I would trade. It's a bit more conservative, kind of confirms the pattern more. It just keeps you a bit safer, so because you can see there are a lot of false breakouts that do happen, and the candles don't actually close there, and a lot of people will take the trade because they're scared they're going to miss a trade. But always keep in mind there will always be another trade, guys. So always manage your risk properly. And for everyone here at BlackBull Markets, thanks for watching. Hope you have a great week. If you've got any questions, link provided down below in the video. And if you want to have a quick chat with us, hop online at blackbullmarkets.com and have a chat to our friendly live support team. Alright guys, thanks for watching and have a great day.